You know, when you see one of those super dense, jargon-filled stock reports and just wish someone could translate it into plain English? Well, that's exactly what we're going to do today. We are diving deep into a technical analysis of one of the most famous stocks on the planet, Berkshire Hathaway's Class A. The goal? To cut through the noise and figure out what it all really means.
So yeah, the big question is, what's the real message here? Forget all the complex charts and numbers for a second. Is this a stock you should be watching, maybe even buying? Or is there something to be worried about? Let's dig in and find out.
Okay, so let's cut right to the chase. After crunching all the numbers, what's the bottom line? Well, the report's outlook is cautiously bullish. So it's seeing a lot of positive signs, an upward trend for sure, but, and this is important, with a few little notes of caution that we're going to break down. Think of it like this. The lights are green, but maybe they're not quite at full blast just yet. First things first, to figure out where a stock might be heading, you've got to know where it's been. So let's start with the big picture trend. So check this out. This gives you the stock's trading range over the last year. And wow, what a journey. From a low of around $660,000 all the way up to a high of over $812,000. The report points out that the current price is about 2/3 of the way to that peak. Now, in the world of technical analysis, that's often a sign that the upward momentum is still very much alive and kicking. But how does that performance stack up against the broader market? Well, year to date, Berkshire is up 11%. And yeah, you'll see the S&P 500 is up 16%. Now, you might think that's lagging, but the report actually frames this in a really interesting way. It's not a weakness, it's a feature. It's a sign of steady value creation, which, let's be honest, is the classic Berkshire philosophy, right? It's not about those quick, flashy wins, it's all about resilience.
And that brings us to this next number, which is absolutely crucial, the beta value. The report flags it at 0.747. So what on earth does that actually mean?
Okay, so a beta of less than 1, like this one, basically means the stock is less volatile than the market as a whole. And here's why that matters. When the market is going on a crazy roller coaster ride, Berkshire Hathaway tends to take a much smoother, calmer path. It perfectly mirrors Warren Buffett's whole philosophy of investing in stable, predictable businesses. The report calls it a defensive tilt, which is why it's so attractive for investors who want that growth, but maybe without the heart palpitations. All right, time to roll up our sleeves and get into the real meat of this report, the technical signals. This is where the jargon usually gets super thick, but don't worry, we're going to slice right through it. So first up, what are we even talking about here? Technical indicators. They're basically just fancy mathematical calculations. They look at a stock's past, its price, how much was traded, how fast the price was changing, and analysts use all that data to try and predict what might happen next. It's like financial fortune telling, but with a lot more math. And this table does a great job of boiling it all down. Let's just walk through it. First up, you've got momentum. That's the speed of the price change, and the report says it's strong and positive. Love to see it. Then there's the trend, which shows buyer dominance. Simple enough, more people are buying than selling. Now oscillators. This one's interesting. It's bullish, but it also warns of mild risk. Basically, the stock might be a little stretched and could be due for a quick breather. And finally, volatility, which just confirms what we saw with that low beta value. It's showing low relative swings. And if you want one line that sums up the technicals, this is it. This quote about MA alignment, that stands for moving averages, is probably one of the strongest bullish statements in the whole analysis. It's saying that all the recent price trends, both short-term and medium-term, are all pointing in the same direction, up. So, we've got a steady trend, we've got positive signals. What does that all add up to? Well, the report uses this data to map out 3 possible futures for the stock. Scenario number 1, and the most likely one, according to the report, is the bullish case. This is where the stock just keeps on climbing. It could push past what's called a resistance level. That's just a price point where sellers have historically jumped in and maybe even challenged that 52-week high we saw earlier. The report thinks strong company earnings would be the fuel for that fire. Then you have the neutral scenario. Think of this as the taking a break scenario. The stock would pretty much trade sideways, just kind of hovering around a technical pivot point of about $766,000. A pivot point is like a center of gravity for the price. This is basically a wait-and-see mode, where the market is just waiting for the next big catalyst before making its next move. And finally, the bearish scenario. This would mean a pullback to a key support level around $736,000. Now, a support level is the opposite of resistance. It's like a price floor where buyers have typically stepped in to prop it up. So, what could cause this? The report mentions things like general market anxiety or maybe even company-specific concerns, like all the talk around the leadership succession plan. Okay, so we've looked at the past, the present signals, and the possible futures. Let's tie it all together and get to the final verdict from this report. The entire analysis gets boiled down into this one single number, a technical score of 41.32. Now, while we don't know the exact scale they're using, the tone of the report makes it really clear that this is a solid, positive score. It's their way of putting a number on that bullish trend, the positive momentum, and that low volatility we've been talking about. So, after all that, what are the key things you should walk away with? 1. The bullish trend is still very much in play. 2. That overbought signal just means you should keep an eye on it, not that you should panic. 3. And this is a big one. The report sees any price dips as potential buying opportunities. It's positioning this as an ideal buy and hold stock, a true defensive powerhouse. And that brings us to this last quote, which I think just perfectly wraps up the whole strategy here. It's not about trying to time the market perfectly. It's about recognizing the company's fundamental strength and seeing any short-term dips as a chance to get in on a super resilient long-term winner. So, after breaking it all down, the report really paints this picture of a stable, strong, defensive powerhouse. But it does leave us with a really interesting question, doesn't it? In a market that so often goes crazy for high-risk, high-speed stocks, is betting on the slow and steady giant the smartest move you can make? That's definitely something to think about.